Hello, everybody. Welcome to the webinar. Sorry for getting started a couple minutes late. I had some audio difficulties with my headset. I had to go find an extra headset. The USB plug was messed up. Okay, so anyways, my name's Troy. I'm a senior account manager with AvaTrade. I'll be leading the fundamental analysis session this evening. If you would, give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Thank you very much. I've got enough responses. So let me just get things set up a little bit more here. One second. Just be a minute. Okay, we're good to go. All right, so as we get going, some things to keep in mind. Obviously, all investments have risk. Trading CFDs, spread betting, options, Forex is no different. There's certainly risk involved, but obviously there's also the potential for nice profits, which is why we're all here. And the idea is to manage your risk in a way that makes sense for you. And we'll go over some concepts and ideas on that as we go through some of the live movements on the charts and apply what we see in terms of the fundamental news situation in a way to maybe give you a preference on what direction you prefer to find entry points with your technical analysis as we go through the charts. In terms of things that we cover, this shouldn't be taken as financial advisement. More from an educational perspective is how you should view things. And the idea is to put more tools on your tool belt, so to speak, so that you have a better knowledge base, better sources of information to improve upon your existing trading strategies, or even to build brand new trading strategies if need be. Now, as we go forward, there are some things to keep in mind in terms of fundamental news, and it's really important to distinguish. Come boy go, no, we're not doing this in French. There are French webinars separate from the English-based webinars. My apologies. Okay, so based on the fundamental news, you can maybe start to predict directions that you think certain assets will go, but there are a couple types of fundamental news that are important to pay attention to and to understand that these different types exist. One type of fundamental news would be regular economic events like earnings reports that are coming up, that we can know the exact day that it's going to occur, what company is involved, whether it's before the market opens, after the market opens, etc. So we know timing, scope, and asset pretty much to a T. All right, and so those are the regular economic events. We don't necessarily know what the results of that announcement or event will be, but at least we know the timing and what it's going to cover in terms of topic. Then the other type of fundamental news is what we can refer to as extraordinary fundamental news. And so these extraordinary things like the coronavirus outbreak, like announcements about, months back, it was Brexit every other week, every other day. There were new breaking stories that you just couldn't predict what they would be or when they would be. And the same is true today with the coronavirus outbreak, this global pandemic. You don't know when a positive story might come out about a new treatment or a negative story about a new outbreak. And so you have to be prepared for both types of fundamental news, both the known and the possible unknown within your trading strategy. It's best to have a combination of strategies that can account for what could happen but hasn't yet, and also account for what has happened and what you think you should do based on that. And so typically it's a combination of different types of pending orders and market moves when appropriate to be able to cover all of these possibilities and to trade in a way that manages risk at the same time. All right, now as we go along, please, as this slide implies, don't wait to the end for questions. Please give input as we go. If there's an asset you want to look at, if there's a question I didn't cover, information you want to share with the rest of the attendees, please feel free to join in and participate. John, welcome. I'm glad that you're here. Okay, so let's go ahead and take a look at the current fundamental news situation. Some of it predictable, some of it maybe not. First of all, Wall Street is sliding today. That's the big headline there. Now, there are some bank holidays around the world, so not all the markets are running, not all the assets are running, but the US holiday was Friday, everything was shut down, and pretty much the US market is running today. So what we can see is the futures were red today, and so if you'd have looked earlier today, you could have saw an indication of what was going to happen when the market opened, okay? So what we see here is the S&P futures, the NASDAQ futures, and by the way, this is something I use often for a fundamental snapshot of the sentiment. Which way is the wind blowing with these assets? Is there fear? Is there optimism? What's the sentiment of the day? And you can quickly look here and see futures are red, and then when the market opens, boom, it followed, red. Okay, it happens very often. So this Dow and S&P, that's the not the futures, that's the actual market when it opened. It's moved that much negative. The Dow's dropped 500 points almost already from the time the New York market opened. And prior to that, the futures were red, giving an indication that that might happen, that there was fear. What's the only thing that's green in this snapshot of the market? What is this S&P 500 VIX? Why would that be green when everything else is red? What is that? What does that tell you when the VIX is up? And I'll tell you if there are no suggestions. Earning. No, it doesn't mean there's earning. Johnny, I'm with you. Fear. Okay. The nickname, the slang name for the VIX index is the fear index, or maybe more appropriately called the volatility index. So yeah, Sharon, Ebert, the green means higher volatility, which typically means markets go down. I'm with you, Geert. I agree. Typically, the fear going up, the volatility going up, leads to, when the market opens, dropping in stocks and indices. Okay, and that's what happened today. So it was predictable earlier today. You could have looked and saw, ooh, futures are in the red. You'd have saw here was green because the last trading day, non-futures trading day, finished green, but you could see the futures were red and that the fear was up. Okay, fear up, futures red equals probably makes sense to look for entry points at resistance points to trade down rather than to trade up from support levels, if you think fear is going to drive down the market. So just in this snapshot here, you can get a feel right away for what direction is the sentiment and what direction might make more sense to find entry points to trade. Okay, and that can be the difference as you go then into your technical analysis on the chart between winning 60% of the time or winning 40% of the time, or winning 55% of the time instead of 45% of the time. It can, and that difference can make a huge difference on the P&L. Just a 5 or 10% win percentage difference because you're going in the preferred direction of the day with the fundamental news. If that improves your win percentage, even by a small amount, it can improve the P&L by a huge amount. And those of you who've been trading for a while, I'm sure you know what I'm saying. You don't have to win 80% of the time to profit, right? You can even profit winning less than 50% of the time, depending on your exposures to your stop loss if you're using one, and the distance to your take profit. Depends how you set the ratio up. But beyond that, the point is you can easily improve upon whatever your win percentage needs to be to profit. You can improve upon that by looking at the fundamental news situation. Yeah, Grace, the green and red. So red typically means danger, dropping, bad news, right? Red. And that all these markets are red. They're dropping. Okay? The major indices are dropping today. But the fact that this one asset is green, it's because that represents fear. So if fear is up over 5.5%, that's what it's showing here, 5.52% rise today, then it makes sense that people are selling risky assets from the stock market. Understand, stock market tends to be risky. What currency do you think is strengthening today? If the stock market is selling off, what currency should be strengthening? What's the safe haven currency? What do people run to when there's fear in the market, when they're leaving equities like stocks and indices? Gold is one, and the Japanese yen is the currency I'm talking about. Good. So we'll take a look at gold, we'll take a look at the yen, and we'll see how easy it might have been to predict what was going to happen. Okay, gold's a little tricky because it's been responding a little different with this pandemic, but the yen has been quite predictable. But gold, I think, responded in an appropriate way today as well. Okay, and we'll take a look at it. So Garrett, you're saying both are going up. Honestly, I didn't even look at the chart. I've been so busy with some other things. So the past couple hours, I didn't look at it, but it makes sense to me that gold and the yen are strengthening. And when you say the yen is going up, what you mean is USD JPY dropped. GBP JPY probably dropped. Euro JPY probably dropped. So as the yen is strengthening, what it's paired against is dropping because the yen is always listed second in the pairing. But yeah, exactly. The yen is going up means it's pulling the others down. And it makes sense. It was predictable. So you could have known that. You could have known to trade down from each high point, let's say on 5-minute candles, if you're a scalper, 15-minute candles, 10-minute candles, you could have known that each time it went up to resistance to trade down on USD JPY all day today by looking at the fundamental news, right? And so imagine how many times you'd have won by trading down from resistance levels on USD JPY today compared to trading up from support levels. And we'll look at it and you'll see the power of the fundamental news. How easily you could have profited just on USD JPY by itself, just by looking at the snapshot that the futures were red and fear was up. You could have known USD JPY sell today or Euro JPY sell today. And so we'll walk through the price levels and show you how easily you could have been profiting and still could. Okay, so let's look at some other fundamental news quickly. Okay, US coronavirus outbreak could peak this week. Do you think that's going to create more fear? The virus peaking? Probably. You know, when people see mass burials in New York, you know, it's a really sad sight. I didn't think I'd ever see that. I'm from the US, and to see that they couldn't bury people fast enough, couldn't refrigerate enough bodies, that they had to dig with bulldozers, big holes in the ground and bury people in wood boxes, not even proper burials. You know, the fact that this outbreak is still getting worse and could peak, that probably is going to continue to put fear in the markets. Yeah. So, Garrett, yeah, there definitely were some things that were underestimated, but part of that was not enough communication from China, I think, about how quickly this thing was spreading and how dangerous it was. There was some mixed information coming out in those first month or two that even the World Health Organization first was saying it couldn't spread from person to person. They were saying it wasn't something that would affect the lungs. They had all this information that turned out to be wrong and really hurt nations all around the world who got caught maybe with their pants down and not quite ready because they weren't warned properly by the folks that knew most about it when it was first breaking out. But you know, that information will slowly be uncovered as well. But in terms of the market's fault, doesn't really matter. We're looking for opportunity, and the sad thing is you can make profit even off of bad news. Okay, so Amazon to add 75,000 jobs as online orders surge. Makes sense that Amazon stock might be up, right? The stock market in general is dropping today, but what do you think Amazon's doing if you look at that headline? And again, I don't think I even looked at Amazon but once, but I think it was on its way up. Okay, Amazon's adding jobs and they're getting more business than they ever have because people are ordering everything from home because everyone's in quarantine. I say everyone, I'm exaggerating, but Many people are in quarantine, and Amazon's just raking it in. Okay, so 75,000 jobs to add during a pandemic. It's an amazing thing. So we'll look at Amazon, and I would imagine it's climbing quite well. If we have time, we'll get to Tesla. I can't promise, but I'll try. And yeah, the webinars are recorded, so you can watch it later if you've got to go. It'll be posted by sometime tomorrow on our YouTube channel. Okay, so Amazon looks promising there. We see here slow day for announcements, bank holiday in a lot of nations, and not a lot going on even in the US with announcements. So the regularly scheduled economic announcements are not really the story today. And by the way, you can find an economic calendar on many websites. Investing.com is one. On their main site, you see economic calendar, click on it, and there you go. And sometimes there's some really important announcements, not so much today. Trump, being Trump, right? He's saying it's his decision when to reopen the U.S. economy. Some think he's not getting along well, maybe with the lead doctor that's giving advice. I don't know that that's so true. The media tends to overreact to things. He's been listening to his experts all along, which is why he didn't open the economy yet. So I think things will be done in stages. I don't think I'd read too much into headlines like this. But you know, in the end, he's right. It is the president's decision. But the governors have a say as well in each individual state in the U.S. So, but this is something to think about. Covering yourself. If you're selling on the market now, today, let's say, because stocks are dropping, indices are dropping, you got to cover yourself on the backside in case there's an announcement that, hey, we're reopening next week. Something that could make the market surge back up. You always have to prepare for the unknown. And that's where I'll show you on the charts. You could have if you were selling, let's say on Dow Jones today, you could have above the first major resistance level, a buy stop, ready to buy, a pending order, just in case breaking news comes out that you didn't expect. That might completely flip the fear factor into positive sentiment. And so you always, well, you don't always have to prepare for that, but I say you should always prepare for that. If you want to be ready for the potential unexpected fundamental news, which was that other type of fundamental news, the unknown that could happen at any time. Okay, so it's interesting to see that Trump's really pushing, and I'm expecting something soon about a plan from Trump and the U.S. As to starting to restart the economy, even if it's piecemeal, step at a time. And I think the markets probably will respond positively to that. So if some big news comes on that, could be today, could be tomorrow, whenever, you be prepared that any sell positions could reverse quickly, maybe have trailing stops once you have a profit that you like. And I can show you how to put a trailing stop on as well to preserve any negative sentiment type trades in case the sentiment flips. You can preserve your profits that way, and have pending orders to be ready for the potential reversal. Yeah, Garrett, I expected that's probably the case. Amazon, wow, 4.38% it's up, you're saying. So yeah, quite predictable that would happen when you just do a quick look of the headlines. This information was available a while back. It's not new. Okay, that Amazon's been doing well with jobs. That article was somewhat new today, but there's been articles in the past weeks that Amazon's expected to be doing well because of online retail sales going up. Okay, one thing to keep in mind before we get on the live charts and look at maybe some trading opportunities based on the fundamental news that we looked at is using the AvaGo app, the mobile app. And if you look here, and we talked about maybe managing your risk in ways that make sense for you, because obviously no one trade is guaranteed to be profitable. So one way to manage your risk is if you use the AvaGo mobile app, which is found under the Trading Platforms tab, AvaTrade Go. Click that link with your mobile device, obviously, and then it'll take you to the appropriate app store for your mobile device by clicking on the appropriate one and download the mobile app. What you'll see on AvaTrade Go, and you see under Trading Info, Ava Protect, it's a feature that's on AvaTrade Go And you see here in the order window, Ava Protect, it's on all FX pairings and also gold and silver. And when it's really volatile, you might say, okay, I have a huge potential for profit if it goes the right way. But if it goes the wrong way, things have been reversing so quick in the way the risk environment is right now, could go flying the wrong way too. So if the premium cost for 1 day, 2 days, 3 days coverage is a small amount compared to the potential profit, then it's a no-brainer maybe to use Ava Protect, have a flat cost, no matter how far it goes the wrong way during that covered time period. Once the coverage period ends, the trade keeps running and any negative floating gets completely added back to your account. Then you manage the trade in another way once the coverage is over. Manage the risk, maybe add a stop loss at that point, or however you would want to manage it. But you can even do by the hour, like 4 hours, 6 hours. There are options like that as well in some of the assets for intraday protection on the trades. Okay, so very unique feature, and it's on the AvaTrade Go app only. So you might check that out. So let's go ahead. Let's take a look at the trading platform. I'm on my demo account here. You obviously could have your live account ready to go as well. This is crude oil. Makes sense that crude oil's down today, right? If there's fear in the markets and there's fear of economic slowdown, and by the way, I didn't show you this article. What is the fear from? And let's take a look. Where is it? Earnings numbers. Okay, there are earnings numbers coming tomorrow. JP Morgan Chase, Wells Fargo, they're expected to have some gruesome numbers, and as are a lot of companies, other than companies like Amazon, which are benefiting from this quarantining environment. But the fear, because they think the numbers for these big banks and for others that are other companies that are going to be reporting earnings soon, even starting tomorrow with these that are mentioned, this is driving fear. And this is partly why gold is going back to its normal trend of expected bad economic news, gold going up now, which it had reversed that trend for a while with how crazy things were. But now that the markets have recovered a bit, people aren't afraid of a total collapse of the economy. So they're willing to get out of their liquidated gold and get back into gold. You know, with too much fear, they were selling gold. Gold was dropping because everyone wanted cash in hand. Now that the markets have recovered a bit, things have stabilized some. Now when earnings numbers come out and it looks like signs of maybe recession, that's a stimulus maybe for gold to climb. And that's exactly what happened today with these companies already news leaking out that their numbers might not be so good. Okay, so, and you know, it's already expected by many analysts that China's going to have really bad numbers this quarter, and many other countries who've been in quarantine. It makes sense. The economies have been shut down for some time now. So, you know, GDP numbers, factory production numbers, you name it, there's expected to be a lot of bad news coming in this coming quarter. So the fact that earnings season is coming, this is a driver of a lot of what we're seeing here. Oil spiked up last week with news of potential production cuts between Russia, US, OPEC nations, even Mexico was joining in the discussion. Okay, oil spiked up, but we talked about it last week that maybe that was a short-term momentum. And if you wanted to short oil to put your stop loss above that high point that the momentum reached, above that 30 mark, and take a shot at a oil pulling back down, because in the bigger picture, there's fear of a global recession from this pandemic, a longer-term global recession that really could hurt the demand for oil. And so that's what took over after the excitement about talk of production cuts, was the reality of global pandemic and fear of global recession, and down came oil. And today, more of a stimulus to push oil down, with the market selling off and the fear up. Okay, so just because oil is low doesn't mean it can't go lower. It's always something to keep in mind. And it makes sense that it stopped at 22. Look, if you don't believe in technical analysis, yeah, Shopify's up too, Garrett. Makes sense. These online retailers Any of them are probably showing some strength while the rest of the market seems to be selling off. And that's pure logical reason, right? You could have known to buy on those particular companies and to sell on the major indices with the fear factor up. But for those of you that are only fundamental traders and you don't get into the technical analysis and you don't believe in it, it's not a coincidence that after this high was established near 29 or so, that when it tried to come back up here, it stopped near the same spot before dropping back down. And it's not a coincidence that this drop back down bounced right off this level and is sitting on it. And if you look across, that was the resistance level before the breakthrough with the news about possible production cuts on oil. So it took big news to break above what was resistance, big news, it broke above. It found resistance. The resistance was respected because the fundamental news overall was not good. So that was a smart entry point to sell. And now where would you take your profit? Just before the major support if you're a scalper, right? If you're in it for more short term, this was the first spot where you would expect it to stop dropping, even if only temporarily. And that's exactly what happened on the exact spot of the old resistance, which would be new support. Okay, so technically speaking, it makes sense it dropped to that spot and slowed. Now the question is, would you buy up off this support level right now? Okay, does the fundamental news say buy oil off the support, that you're going to get a big bounce right now? Let's take a vote. Okay, I already see the answers coming in. No, probably not, right? So this is what I'm talking about, picking your entry points. Now, technically speaking, that's a nice support level to buy from, right? And there is some fundamental news out there that, hey, production cuts could come. So if there was an announcement right now that Russia, OPEC, US agree to 20% production cuts, if that announcement came, probably oil would jump back up towards 30 again, right? But barring some positive news, right now there's fear on the market. The indices are selling off. It doesn't seem like the fundamental situation news-wise for a strong bounce up off this support level now. So this is where you start to pick and choose which technical analysis support and resistance levels you trust to trade up from or down from, etc. It's consolidating, exactly, Ed. I see consolidation. I don't see a strong bounce. So what could you prepare below? What do you think would happen if it breaks this support level? Let's go to maybe 4-hour candles. If it breaks this support level that we drew, okay, this is the support. Let's go back to 1 hour. Here's the support level, support, support, support. If it breaks this support level and comes down here, let's look on the 4-hour candles. Where's the next support level? Right here, okay? 19.5 about, okay? So what might make more sense than buying off this support is to prepare what type of pending order in case it breaks the support. Because if it breaks the support, that's a confirmatory movement. If it breaks the support, a sell stop would be beautiful to kick in, right? So we're picking and choosing. I don't want to buy off the support. And by the way, you can if you want to. There could be a bounce. I'm not saying there won't be. I'm just saying I don't like to trade against the fundamental news. Okay? It's possible there could be a breaking story that makes it go bouncing up. I feel like I would rather prepare with the fundamental news that I know right now, which would be a sell stop prepared with an entry point only activated if it breaks the support level. And even if I wait to get in at 21.9 or 21.8, it's another $2 drop in the price of oil before the next support level. $2 drop if I'm taking, I don't know, a 1-lot position is $2,000 profit. So that move doesn't look huge from this broken support to the next support, but it depends on your balance and your trade size, what $2 movement in oil can be. And in actuality, $2 movement in oil is a pretty significant move. So if it breaks this support, you have the potential for it to chase down to that next support level. And how much would you have to risk if you entered here and put your stop loss just back above the resistance? Maybe 50 cents, right? You don't have to risk so much, maybe $1. You could go 2 to 1 if you wanted to. $1 back up to your stop loss and $2 potential profit. That way, if you're right on those types of moves 50% of the time, which you probably should be if you're going with the fundamental news, then you profit because you're making twice as much on the win as you're losing on the loss. Okay? With a proper technical entry point to get to the other side of that, what should be resistance if the support gets broken, you don't have to risk much. And your potential profit could be double with a small risk. Little moves like that, you might think, oh, that's not so much. Listen, if you gain 1% on your account per day, on average, 1%, which you don't have to overexpose your account per move that way, you can take small trade sizes compared to your balance. If you just gain 1% per day on average, that's 20% gain a month approximately. You double your investment in less than 6 months with that type of percent return. So to try and, if you have a balance of only $1,000 and you take a full lot trade, you're risking blowing a huge portion of your account on one move. And you can do that if you want. Some people are highly aggressive, but understand the risk and take trade sizes that make sense for your risk tolerance, and understand you don't have to have huge percent gains to, in the end, have a nice monthly return. Okay, so these little moves, these little scalp moves, as they're called, scalping is where you're getting in and out in short moves, can really add up. And you can really have precise entry points that, what happened when it broke this resistance on the way up? Look at the breakthrough candle. It went flying through. A lot of times that's what you get with breakthrough candles, is a larger movement than the prior candles. So if on the way up, it took big enough news that you had a huge breakthrough candle, on the way down, it might take just as big of news to break back below, and you might get the same type of breakthrough candle. And again, in this type of setup, if that happens 50% of the time, you're profiting. Okay? Any questions or anything as we're going along, please ask. Okay? I want some communication if needed. Don't be afraid to interrupt me. Let's look at gold. So we see a potential move there for oil. Gold, how predictable was this? And let's walk through what you could have done today. Okay? The first resistance level here. Okay, and these are 30-minute candles. So go back 1, 2, 3, 4. This is only 4.5 hours back. All right, this is when the U.S. market opened. So if you're in Europe, if you're in Australia, if you're in later time zones around the world, right, or in Canada in the morning time, you could have already seen the futures were way red. You could have already saw the fear index was up. You could have missed all of this climbing that was earlier in the day and had a pending order still up here waiting for the US market to open, a pending buy stop, knowing, okay, I'll prepare a buy stop above the resistance level because I already took a quick look on, in this case, investing.com we looked at, and saw fear factor was red. I mean green, meaning fear was rising. Futures were red, dropping, which means, okay, maybe I expect the safe haven gold to climb. So you prepare a buy stop above the resistance level, waiting for confirmation that indeed when the US market opens, gold had upward momentum. Here's your breakthrough candle. Remember I just said breakthrough candles are usually larger than the prior candles. Look how these candles were small. US market opens, boom, breaks through the resistance. Your buy stop kicks in, and even getting in after the US market opened, after this big climb up of $10 spike in gold, you get in with at a time where you might think, well, that's late to get in on a buy. Why are you buying from a higher point? The point of the buy stop pending order, buying from a higher point, is it confirms upward momentum. Okay, so this spiked through the resistance, hits your buy stop. You had your buy stop above the resistance, knowing that if it broke the resistance, there must have been strong upward momentum on gold. It sure did break the resistance. It would have kicked in your buy stop, and getting in even at 1695, you'd be 20 per ounce in profit on gold with a simple pending order that all you had to do was take 5 seconds to look at this on the front page of investing.com. All you had to do was look, say, futures were red, VIX index was up, fear factor was up in green. That equals maybe safe haven strengthening. You put your pending order above the resistance level that was established before the US market opened. You put your buy stop up here. If gold drops, okay, fine, you didn't get in and you're not losing. If it breaks the resistance and triggers your buy stop, it confirms what you were thinking. Gold went up with momentum and broke the resistance, so your buy stop kicks in, and look how it carried up through the day already. Another $20 up. You know, I don't even want to suggest how much money you could have made, depends on your balance, but that's a large movement for gold. Okay, Peter, your point about gold has been following the indices for a while, and you're right. As the global pandemic first came out, people were selling gold off with bad news. People were selling gold off with bad news. And so it was mixing people up because usually with bad news, gold goes up. And so as this pandemic fear got so high, people were actually selling, and entities, not just people, businesses and even government entities were selling off large amounts of gold to have cash in hand. So if you think about it, it makes sense. When there's poor economic conditions, but not a total crash expected, right? People buy gold because, okay, I'm preparing for when there might be a really bad time. You buy gold because you think, well, the value of other things are dropping, gold will go up. Why do you want to have gold as gold is going up? So that later, if there is a crisis, you have something of value that you can then sell to get cash, right? So people were buying gold through last year. Gold went up 1,200, 1,300, 1,400, 1,500, 1,600, as there was fear that the market was overbought. And some of the signs out of China were really bad with their economic numbers before the pandemic. So bad economic news was driving gold up. What happened with the pandemic is the news was so bad that there was fear of a total collapse of economies. Then that was the time that they bought gold for, meaning it was time to sell the gold and have cash in hand to be able to pay your bills, to be able to keep your business open or your government running. So a total collapse fear of the economy brought upon selling of gold to get it liquid and have cash in hand. So that's what happened. Now, why did gold go more as traditionally as expected now? Why did gold climb with the fear today? Well, it's because the fear is about things that are more long-term, more normal fears, like bad earnings numbers, right? The fear now isn't total collapse of the world economy, right? The fear is probably recession coming in many nations. And so as companies are reporting bad numbers to confirm that longer-term fear, and at the same time, the fear of a total collapse of economies has kind of gone away. Now the normal relationship seems to have returned, where bad earnings numbers, gold climbs. Good numbers, maybe gold comes back down. Okay, and that's what we saw today. Okay, there's confirmation that things are going back to more traditional type movements right now. We're seeing it right here on the chart. Now the question is, Peter, and you made a good point, how would you know that that was going to happen? And my answer is, you didn't have to know. All you had to do was put a buy stop pending order above the resistance, and if it broke through, that confirmed that that's what happened. And so sometimes you prepare for the unknown with pending orders, like I was saying as we opened the webinar. Just the fact that you knew it was big news and a lot of fear. Okay, you could prepare that buy stop above the resistance in case it broke through, and it did, and there you go, big profit. So things seem to be starting to return back to normal, Peter, in general, with the relationship between fear and gold. Just in the past couple days, I've seen it. Okay, and part of it to watch is if the volatility index is not way up at 50, 60 like it's been, which is like panic level. The volatility index is at 43. Okay, it's down below 50. So it's not at 70, 80 like it was getting to, where it was just complete panic and everyone was selling off gold to have cash in hand. Now the fear index is, the volatility index is down below 50. Seems to be more of a normal relationship now. There's fear, but not total panic. All right. That could change, obviously. And that's why you prepare those pending orders just in case. Okay. You go with what you know now. You prepare for the unknown with the pendings. All right. All right. Let's look at some. That's a good question. You're asking about the Canadian. Let's take a look. Canadian JPY. And the yen is a smart thing maybe to pair it against. Let's, whoops, let me scroll here and find it. Here we are. So Canadian JPY, 30-minute candles. We see the Canadian was dropping quite a bit and it bounced. Okay. Remember, the Canadian is tied to oil, right? And so oil had some bullish momentum because of the potential production cuts that would drive up oil price, and that helps the Canadian be bullish. But then the bad economic news with the earnings maybe helped weaken the Canadian as oil prices came down, right? So oil prices dropped through the day today, and until about 2.5 hours ago, the Canadian was also dropping against the yen, right? So you could have already profited today on the drop of the Canadian. Now we see it spiking. And now let's do a quick test. GBP JPY, not jumping, right? Let's look at USD JPY, if I can find it. USD JPY, where is it hiding? Up here. Okay. USD JPY, also still dropping. Okay, so it's the Canadian dollar, right? Who mentioned the Canadian dollar? Antonia. It's the Canadian dollar that's strengthening. It's not the yen that's weakening so much, right? Something specific about the Canadian dollar right now is climbing, causing it to climb. So let's look at USD Canadian and see if the Canadian is strengthening against everything, and it is. So we have an outlier. The yen, just as we suspected, is pulling other currencies down, and you could have been trading, and we'll investigate the Canadian in a second. You could have been trading down through breakthrough levels on the Canadian against the yen, with other currencies against the yen. You'd have been winning on the Euro JPY all day. It's been breaking support levels all day long. Here's a support level it broke. Here's another support level that formed, support, and there it broke. So your sell stops would have been winning all day today on Euro JPY, on GBP or USD JPY. Okay, support level broken, sell stop would have been a winner, right? Another support level formed here, support, bounced up, broke through, another winner. Okay, another support level formed here, support, breakthrough, another sell stop, winner. Okay, all day long against the yen, most pairings would have been a winner. How would you know that you kept wanting to prepare sell stops below the support levels to sell? Again, the fundamental news, it would have taken you literally 10 seconds to look at that snapshot of the futures being red and the VIX index being green, fear up. Okay, so the Canadian was dropping today against the yen. It just reversed only a couple hours ago. So we have to understand why. Right now, I wouldn't trade on the Canadian JPY till you know why it's acting different than all the other pairings against the yen. The yen is still strong. Look at the USD, it's dropping against the yen still, right? The GBP dropping against the yen still, the euro dropping against the yen still. So this is a good lesson in diversification, by the way. If you were trading 4 different trades, selling with sell stops against the yen, And one of them was the Canadian JPY, and the other three were Euro JPY, GBP JPY, and USD JPY. By diversifying, even though the Canadian has shot the wrong way unexpectedly, 3 out of 4 you'd still be winning on. You're going with the fundamental news. You diversified with 4 different pairings against the yen. 3 out of 4 going the way you expected. The Canadian just spiked the wrong way the last couple hours, and we don't know why yet. Okay? So let's investigate. First, type OK if you understand how you would have set this up, the profit on the sell stops throughout the whole day today with the JPY pairings. Okay? Easy to do. And by the way, you could have been selling from the resistance as well, selling down from the high points as they climbed up and formed resistance on the 5-minute candles or whatever candles you prefer for shorter term trading. You could have been selling from the resistance as well. So let's take a look then at why is the Canadian strengthening. And so let's look for some news articles. Okay. First of all, let's look at economic calendar. Did the Canadian have some announcements? Okay. There was today, small one earlier. Nothing major was announced in terms of regular economic events. If we go to the main page, headlines are still about the Dow near lows, remains vulnerable, etc. Okay. Nothing about Canada that I'm seeing. If we go to Reuters, let's look at the headline. We could go to markets, the markets home. Here, okay, Russia hails oil deal. It says will save millions of US jobs. Okay, this was updated 5 hours ago, so it's not something new. But it looks like maybe there's some positive sentiment about a deal with Russia and the OPEC nations and the US for an oil deal. And this is good that a movement happened. Yeah, listen, Canada does mine minerals, and if the minerals are rising today, precious metals, etc., that could be helping the Canadian dollar. So it's something to keep in mind. But my rule of thumb is if you don't know why something's happening, then maybe you don't trade on it, right? So it looks like this could have been, let's go back to the JPY pairing, since we know the yen is strengthening against everything else. And let's go to 1 hour, 4 hour. Here's on the 1 hour candles, it broke through this resistance here. You see, this was old support. It broke earlier today. It broke the support. You'd have been profiting. All of a sudden, the Canadian strengthened. Technically speaking, you buy on this. It broke the resistance. It's headed towards the next resistance. Technically speaking, you buy on the Canadian JPY. And you take profits at the next resistance level up here, okay? I don't like going against the fundamental news or trading on something that I don't know for sure why it's climbing. So until I knew more, I would leave the Canadian JPY alone myself. You might jump on the trend, you know, the old phrase, trend is your friend. A technical trader has no problem buying on this uptrend. A purely technical trader would buy on this just because it broke the resistance. It broke the resistance, breakthrough candle, buy, right? Some traders are successful that way. If I tend to be a little more cautious. If I don't know why something happened, I stay away from it a bit. Okay, but yeah, that's a classic breakthrough, and that's an outlier compared to the other yen pairings. Okay, so still you'd be profiting on the yen pairings going with the yen against the other currencies. One outlier that if you didn't diversify could have got you with a loss there. But again, you'd be putting your stop loss just above the resistance, and you wouldn't have had to have lost much anyways. And this is a good lesson for preparing, just like we said we could prepare for the unknown with the Dow Jones, with other assets in case there's news that causes it to reverse. to prepare above a resistance level, you could have had a buy stop prepared above this resistance level for the same reason, just in case some kind of news broke that caused a reversal of the trend. And if it broke this resistance, look what happened. We were talking about classic breakthrough candles. There it is. Preparing a buy stop for the potential fundamental news that's unknown. Here's a classic example of how it would have worked. Okay. Lyth, that's exactly right. Production cuts drives the price of oil up, right? And that would be good for the Canadian dollar because their number one export GDP wise is oil. Okay. So, but the point here isn't that rising oil prices would help strengthen the Canadian. The point is we don't see any news that broke in the last, 1 hour to cause this breakthrough. Nothing new that we're seeing. There probably was something, and we'll see it eventually. But this is a good lesson about you don't have to know what the news is necessarily, and you can prepare for the unknown, that unexpected type of breaking news with pending orders. So a buy stop above this resistance, even if you were selling on this pairing because of the fundamental news you already knew, the buy stop would have paid tremendously. And you see it's still pushing towards this resistance level. All right. Thobagang, I'm sorry if I mispronounce your name. You can use the VIX index every day to help make your decisions. You can see whether volatility is up for the day or down for the day, whether fear is up or down for the day, and that can help drive your decision making, certainly. And you can see how helpful it would have been today. 3 out of 4 pairings against the yen, you'd have been profitable all day long, with one exception. A pending buy stop prepared on all of those pairings just in case they reversed would have paid here. Sell stops would have paid all day on the major indices as well so far, because of understanding which way the wind was blowing with the volatility index. It's not going to work perfect all the time, but the idea with trading is being right more than you're wrong, or profiting more than you lose. Now, the USD is traditionally not a safe haven currency, but with all the fear about the global pandemic, people trust the US dollar more than many other currencies. So it was acting as somewhat of a safe haven currency. Over the past month or so, the US dollar index strengthened quite a bit. As things calm down, the US dollar will probably weaken a bit more. Okay, weaken back down, which it already started doing that as some of the fear calms down. Yeah, Stephen, 5.5% move on the volatility index is quite a large move traditionally. Okay, lately it's been an expected move, but traditionally quite a large move. Okay, everybody, we've been going for about an hour. I think it's been a good session. We've seen some lessons learned about news flipping, even if it's unexpected. A pending buy stop, backing up any sell positions would have paid nicely. We've seen the majority of the assets move the direction we expected. GBP, JPY, Euro, JPY, USD, JPY, Dow Jones, NASDAQ, gold, etc., moving the way we expected. One outlier that we still could have profited on if we were backing ourselves up with pending orders like we talked about. So very, very easily some great payouts here. Okay. All right. Thank you, Ebert. Thanks, everybody, for the comments and for attending. Until next time, good luck with your trading. I'll be back on Friday for our Friday session, 1 p.m. London time. And be in touch with your account managers if you need anything, any help between the sessions. Okay. All right. Bye for now, everybody.